Yeah, this doesn't look. I mean, this doesn't look very bullish, right? Like this at least looks like it needs to pull back to like back to 5090 on the future side of things, if not all the way back to trend, right? Which would be like a retest of 5,000. 510, maybe 550, 5010, 5015. Haha. I hope that holds. Yeah, we'll see what the closing price is. Ding ding. The day is done. All right. So we exceeded the market maker's expected move by about, let's say about 30 bips. However, it does appear that we've failed the test at 5075, which is kind of the reversal point here. I would really say 5080. So we kind of failed a little bit under, but there's more volume confirmation at the 70 strike. Anyway, so the test failed. And this could mean a pullback, to 5040, or even a pullback to, like that 505 level back down here. Obviously, durables will have some effect on the direction this takes tomorrow. And I think if durables are also a bit cooler, that will embolden bulls a bit more. And that's kind of what I was expecting to get that move towards, 5130 ish by Wednesday before GDP. And so this would probably need cooler durables print. If durables demand is way up, especially on the consumer side, that's probably going to push inflation expectations higher. It's definitely going to move the dollar back up, and that could see us get that pullback, right? So that's mostly what I'll be looking for into tomorrow. I'm still slightly hedged, like 50-50 to 51-15. I have like 15 of those spreads left. I don't really have any downside exposure though. So I mean, if it fails, I guess I'll just pick up some intraday puts or something. As far as ES goes, yeah, we're failing the upper test of the trend. This is starting to get pretty distributive, and a failure below 5090 is going to encourage profit taking from all of the buyers in this range, right? So if this even if it happens overnight, it could start to get all of these buyers to dump their positions. And remember, we don't really have any CTAs coming in until we get back up here above 5200. So CTAs are still net sellers in all conditions. And the big move in the money delta today was able to stabilize price, but otherwise our sell-offs would have been probably a lot more extreme. That and falling volatility helped a lot. Commodities moved up a little bit today, but negligible amount. Dollar fell and yields fell earlier in the day, although it does seem that they've recovered in the back half of the day. The 2 year moved back above where it auctioned off at 4.89, now at 4.92, 4.925. The looks like the 10 year started to drift back a bit towards 460, and the 5 year stayed above 4.6. I think most of the day. The 3 month expectations and 6 month expectations are still not really showing any indication that the bond market thinks the Fed is going to cut rates in the near term. So, despite the news and the narrative and what equity markets think, they're still pricing in a federal funds rate right around the current level we're at. Maybe the 6 month is pricing in a little bit more in cuts. Correlation on the 1 and the 3 month is actually fucking crashing, and this is largely an effect of short vol, right? Like short vol is just coming in as hard as it feasibly can, and trying to get that volatility down and get the risk and the margin risk off of those underwater short positions, right? I will say correlation on the 3 month isn't pulling back as fast, so most of the vol shorting is short term, but they are shorting the out of it. And in doing so, they have gotten the forward yield of volatility back to negative and a close at the end of the day today. Um, probably a big goal there. Stop the constant demand for long vol. That might help not only make options to the upside cheaper, but cool off some of that long vol demand that keeps spiking volatility over the last couple of weeks. Skew isn't updated yet. We got about 28.8% of the S&P above its 30-day moving average, and correlation between VIX and VIX futures is now at negative 19.85, which is still more highly correlated than we were at the end of last week. But most of the improvement in correlation here, I think, is because VIX is dropping and VIX futures are staying relatively flat compared to that drop. And yeah, I mean, VIX in front is down 7%, and VIX futures is only down 4, right? So they're becoming more correlated, but the opposite way. And we're pricing in 36 points of rate cuts, which is a bit higher than we have over the last few days, but it's, I mean, still significantly less than 2 full cuts. Durables could shift expectations on inflation. We could see, I think, between durables, GDP, and PCE at the end of the week, we could possibly see Fed fund futures price out the rest of the second rate cut. I think they'll leave one priced in no matter what until the Fed officially says that they're going to cut all of them out. But we could go down to, pricing in 25 to 20 points of cuts for the rest of 2024. And we'll see how that goes. Obviously, that would have a big impact on the top end of the yield curve, the 10, 20, and 30. And it would have probably a fairly big impact on the 2-year, as well as seeing that demand for volatility return, seeing dollar move up, seeing precious metals move up alongside the dollar. That's dropped in anticipation of GDP being cooler. But if GDP is hot, that's going to reverse back to where it was, if not higher. Tesla, 45 cents a share, 21.3 billion. So missed on earnings, beat on revenues. That's not bad. Go EV tips. Yeah, I mean, they look like they're getting ready to cross back over to the downside, which is, generally means that Go EV is becoming more liquid over time. And that's, a trend that we've been seeing for 2 days now. But that's not nearly enough. We definitely want to see, this move into a range where the stock becomes much more liquid. And that would probably mean squeezing off those 350C to the upside. If it does that, it can run. There's not a lot of interest at $4 and $5 yet, but it could increase. I think, Gamma Max is pretty far out of the money, but I don't think it's super accurate. The majority of options interest on this is between 2 and 350. And so once it gets above 350, I mean, you'll get an effect from squeezing those off, if they squeeze off, but it probably won't last long, right? It may just be that the market maker kind of deleverages the hedge on them a bit, and we squeeze, and then people just keep selling them, which could also happen too, right? So, and that's, you might get like 10% over the strike, maybe 20. So everybody and their mother shorted Tesla, and they beat on revenues. Tesla back to 200. Dork's gonna regret the put he closed. I mean, Tesla just didn't have a lot of downside left. That's why I was trying to discourage people from it all day. Visa? Ooh, nice. God, I want to short them into the back half of this year. So bad. But they just never stop making money. Do you see earnings beating or reversing or reverse split incoming? Why would it reverse split? It's not under $1. They don't have any reason to RS. They already meet listing requirements. I made like 300 off of Fruit Loops today. Nice. Enphase down. Elon promising the moon. Of course, as long as he gets his pay package. Otherwise, he's going to threaten to run away again. All right. Anyway, I will see you guys bright and early tomorrow morning. Everybody have a wonderful night. Later.